So I want to actually get us started with what some of the expectations are around annual growth rates. Some of that are what you can see on the bottom half of this slide. We're really looking at GDP levels from a massive contraction there of about -7% to really covering up a lot of that ground, growing by close to 8% on a year-on-year basis in 2021. We then, like I've been talking about, which is the theme of 2022, a period of normalization of the overall GDP levels in 2022, falling at about 7% growth. The biggest movements here, or the biggest variations, I would say, levels of volatility that we are seeing in the market are actually in terms of the overall investment growth levels. Investment levels saw the steepest contraction in 2020, falling by about 10% on a year-on-year basis, but then also seeing a very, very large level of expansion as a result in 2021, growing by about the same amount. Again, feeding into the overall theme of normalization, we have about 8%, an expectation of about 8% year-on-year growth rate in 2022. Let's actually talk about some of the different themes or some of the different drivers of growth here from a medium-term perspective, from a 2022 perspective. The first thing that I would definitely say that does come out, in fact, in the budget also, is the fact that a large amount of government investment in infrastructure is expected. We also have the government being extremely keen on spurring a lot of that domestic manufacturing in some of its key sectors of focus. So you have that as a second driver of growth. And then finally, certainly, we also have some of that spending from your higher income segments of the market to drive some of that growth moving into 2022. Explaining a little bit about what we are doing with that chart there, the whole theme around 2020 and 2021 was that massive period of contraction followed by extreme levels of expansion. A lot of that may have a little bit to do with recovery levels, but has a lot to do with basic statistics, with basic maths. If something contracts, if any of these metrics contract by about 10%, you need to have a much, much larger percentage of growth in 2021 to actually cover up a lot of that ground there to make up for basically low base effects that we saw back in 2020. So in order to remove a lot of that noise that we saw around extreme contractions followed by extreme expansions, what we've really done is we've indexed GDP and a lot of its different component levels to a level of 100 back in Q4 of 2019, where we assume that overall growth levels, the overall economy, was in a pre-pandemic normal phase. Moving from that, we have a lot of our historical quarterly growth rates that you can see in those solid lines on the chart there. And then moving into the end of 2021 and certainly into 2022, a lot of those dotted lines actually show our forward-looking forecasts. A few key things that I'd just like to point out here. Number one, unfortunately, consumer spending, just because that has been that big metric that gets hit the most as a result of the pandemic, that's the one that's likely to recover last. When I say last, I actually just mean basically by Q1 of 2022, but this is actually in sharp contrast with some of the other elements of growth that we're seeing here, namely overall investment levels, which actually recovered far beyond pre-pandemic levels by Q3 of 2021 itself. GDP, on the other hand, which basically is made up of consumer spending, investment, government spending, as well as external trade levels, that's the one that basically just peaked beyond, slightly beyond pre-pandemic levels in Q3 of 2021. And so from an aggregate perspective, we are certainly expecting that the market has basically reached or recovered to pre-pandemic levels in 2021, followed by a phase of growth that you're likely to, or you should look forward to expecting moving into 2022. So we don't just want to be looking at what India or how India has performed by itself, but also certainly look at what India's performance has been compared to some of its other regional peers. This is something that can be an extremely useful set of indicators to use basically for a lot of your market prioritization exercises. What we have here is basically how India is performing compared to some of its regional peers. India here is in that glowing gray line in the middle of the chart that you can see there. Now, the first thing that I would definitely point out is the fact that through a lot of the different waves of the pandemic that we've seen so far, India's GDP levels, so the overall economic activity levels, has been the hardest hit. So if you just pay attention to that glowing gray line there, in Q2 of 2020, India basically fell way, way below any of the other markets that you would have your presence in. And then when you move into Q2 of 2021, that's again where that gray line falls to the very bottom half of the chart. But as intensely as India's GDP levels tend to contract, it also tends to be very, very reactive in terms of its overall recovery levels very shortly after. And so you're really looking at the same thing playing out just after the first wave hit. Basically, India's overall ranking in terms of GDP performance went to number 3 by the time we reached the end of 2020. Similarly, you are really expecting, or you should expect, a very quick recovery here from the Indian market by the time we hit Q4 of 2021, and certainly moving into 2022. We're basically expecting that the Indian economy will rank either number 3 or 4 from an overall recovery perspective when you're really taking Asia Pacific as a broader regional market. So certainly a promising level of recovery there, despite the fact that there have been 2 pretty intense periods of contraction that the Indian economy has seen over the last 2 years or so. We want to also take a little bit of a broader view, not just looking at some of those quarterly growth rates that we saw back in 2021 as well as 2022, but really look to about 3 years beyond. As we understand through a lot of the different client conversations that we have, a lot of our clients do appreciate some of the short-term views that we have, but also take into account some of our forecasts for longer range planning. Again, when you want to be looking at India from a broader regional perspective, 2020 and 2021 were certainly years of slight disruption that we saw there. So 2020 certainly falling to the very bottom of the chart, 2021 being a period of recovery. So you're just back at basically that 100 line or a pre-pandemic level of economic activity. But very quickly then moving into 2022, and certainly if you're looking at the snapshot of 2025, India from a regional performance perspective will likely recover very, very, very quickly, move far beyond a lot of its different regional peers to basically recovering at number 2 here, just behind China, again, compared to some of the other regional peers. So you had periods of contraction, you had an intense level of disruption there just as a result of the pandemic. But certainly 2022, you're looking at a period of stabilization, and then moving into 2023 and beyond, we're really going to enter a period of growth for the market. So something to certainly be optimistic about as you're comparing India to some of the other markets in your Asia Pacific portfolio.
Hi, my name is Krista Regani, and I'm Marketing Director here at FrontierView. I'd like to thank you for watching a segment of this webinar. If you'd like access to the full video and our latest insights, data, and research, sign up for a free trial with us today. Simply scan the QR code on the screen.